Hey, thank you very much. It's my pleasure to welcome Chuck Malamut, our official financial advisor, to the Hurley in the Morning program. We're now in our 26th year doing this program on Tuesday mornings. The time has never changed. The day has never changed. For 26 consecutive years. Oh, yeah, it would be nice if I plugged in Chuck's headset. That would always be good. Nice headset, but it doesn't work if it's not plugged in. Thought I plugged it in at 4 o'clock this morning. Anyhow, Chuck leads his wonderful team, the Malamut Group, at Morgan Stanley's Northfield office. 609-383-2010 is the number to reach Chuck and his team for all of your financial planning needs. And the following program that you're going to enjoy is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of today's broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, how are you, my good friend?
Good morning, Harry.
Good to see you. I missed you last week.
I missed you too, and
It's been a week.
I wanted to call you, but obviously
you were very polite. And anybody that called me last week and I didn't pick up, the whole point was I couldn't talk. And I didn't pick up a lot of phone calls yesterday because I'm resting. I'm breaking myself in gingerly here. But yesterday was a very rough 6 a.m. beginning. Today, things are holding up.
It'll get better, Harry. You know, I was thinking about getting into a sort of a texting war with you since you couldn't talk.
Could have done that.
But I thought it'd be best just to leave things alone and let you
heal.
Let you get rested because you deserve it for
Thank
sure.
You, Chuck.
But hey, I know we don't like to talk about politics, or I know you like to talk about politics, but I'm not really a fan of that. But I will tell you, I was literally glued to the radio the last
Wasn't that
half
great?
hour. I mean, I love Denny. I mean, there's
that was 25 must-listen-to minutes of radio.
They say that men cannot multitask, but, for him to be able to have a discussion with you and your listeners and take care of his grandchildren at the same time, that's quite a feet. So I heard
something beautiful when the little one said, "Thank you, Pop."
Yeah, so my hat's off to him. But, I'm going to voice, this is my opinion, and I'm not quite certain that you might agree with it, but there is obviously a lot of rhetoric right now and a lot of angst, and something that we said, we said many, many months ago. And
Chuck, time out 1 second. This is just for our listeners. I meant to do this right at the beginning, Chuck, and I was so enthralled with seeing you again for the first time in a week, my manhood crush that I have with you, that I didn't put this important information out there. I want to thank a good friend of the program, Craig, for sharing it. I hate to share the news, and I don't have a lot of specifics. Chris Coleman, if you're listening and you want to follow up on this, there's a bad accident at Fire and Tilton Roads. I don't know the extent to which, and I've even asked a few questions. All right, traffic is not halted, so you can get by the intersection. I did get an answer to that question that I had posed just a moment ago. So there's a bad accident in Fire and Tilton Road. So just, be guided accordingly. Chuck, time is yours.
Harry, I mean, maybe this is just terribly simplistic when we make this statement, but instead of think about the wasted energies between mostly the city and the state, and now a little bit, obviously, as Denny said, that the budget was prepared 9 times.
Can you imagine that? I
mean, just you talk about a waste of energy. So I'm thinking that really you got a lot of smart people here, and I'm certain there are solutions, but why don't you get them all in a room and you lock the door?
And let them out.
And nobody comes
until
out
there's a solution.
Until it's over.
So it's Survivor. And we'll have someone on the island will win, and there'll be alliances formed, and people will be voted out one by one. But here's the problem, though, Chuck. You have state shareholders, county shareholders, you have the local shareholders. Of course, you have all 23 municipalities in Atlantic County directly affected. We've often said on this program for the past quarter of a century, as Atlantic City goes, so goes the state. So certainly that applies to so goes the county and multiple counties. Everybody is held hostage to the fix of Atlantic City right now. And we have this game of chicken going on where Senator Sweeney wants a takeover. I'll tell you what, I'll tell you who's an interesting character in all this, and he almost never gets mentioned, is the Assembly Speaker, Vincent Prieto. This guy just keeps his powder dry. He hasn't taken a position on any of this. Knowing him, I guarantee you he's meeting with people privately, but who knows? I can't confirm that. I just have my own sort of spidey senses after doing this for so long. But he has taken no position on any of this. But look, here's the thing. It may sound parochial, but can you blame local officials who do not want to hand over? You know, Chuck, you were the VP of Hotel Operations. Would you like to be called the VP of Hotel Operations, but Mr. Wynn brings in me and I do everything and you just have the business card? You're going to get out of there in a country second. The state wants to literally take over operations, the finances of the city. They want the right to be able to dissolve collective bargaining agreements. How about this one? How about your President Moynihan of the PBA, and you guys have given up millions of dollars, substantial five figures into the millions of dollars, and you have a situation where, what did you give all this back for? You gave it back to save your department. You gave it back to be, loyal team players, and now all of a sudden somebody wants to come in and they want to crush you. And they want to put some county department in and say that your people, if they're lucky, are going to make half of what they used to make and have different benefits, and everything that you've negotiated can be squashed. Chuck, these are serious things that are going on right now.
Yeah, and Harry, unfortunately, I think that, all the players aren't particularly strong here. And the fact of the matter, and I think Denny said it very well in the last half hour, is that the multiple downgrades that Moody's and S&P have put on the state of New Jersey, whether it's their general obligation bonds. I mean, if you look at the New Jersey State Transportation Trust Fund, I mean, that particular entity has a fair amount of problems, and so. Are you getting weak hands coming in, running weak hands? And there are solutions, Harry, to any situation.
All right, I agree with that. So what are the solutions? The city wants to have a partnership with the state. They want to keep their public safety local and intact. I honestly don't believe the Camden model should even be hailed as a success. Mm-hmm. It's a joke. It's a joke. The amount of money that they put into it for one city, and they call it a county police department. I mean, give me a break. It's absolutely just fake. So that's not the answer to me. The answer isn't a takeover, because you shouldn't upset the home rule of localness. The residents are not going to like that. They're not going to go for that. They're not going to accept that. And yet the ability for the state to offer transitional aid to Atlantic City is predicated upon a takeover. Only they want to insult everybody and act like it's not a takeover. Come on. If you tell somebody that I can dissolve every contract, sell every piece of land that you have, I want total control of finances, want total control of all your city operations, Chuck, let's be honest. Isn't that a takeover?
It is a takeover, Harry, and you asked what the solutions are, and I don't, for me to communicate with your wide range of listeners, I am not in a position to do so now.
What about the fact that the state had Ed Sazdelli and other people before him, and Kevin Lavin and Kevin Orr, and did all this hoop-de-doo review? That's my Disney homage for this morning. On Atlantic City, and now they pretend like Atlantic City didn't listen. The Atlantic City won't get out of its own way. Atlantic City won't change. What are you talking about?
Look,
the state sanctioned every decision that's been made.
There's no doubt about this being a political football.
It's terrible, but they're lying about it.
And now, unfortunately, I'll get to the conclusion, and we're going to move on because we don't have a lot of time here. But unfortunately, with tourism being the number one industry in the city of Atlantic City, because we have no, quote, other industry to speak of, and that's something that needs to be worked on, whether it's at a state or a county or a local level. The fact of the matter is, you were in the hospitality business. You understand it. You serve a bad meal, and 20 people find out.
That's right.
So
serve a good meal.
You might get a handful of people
Right.
that find out about it. So this continual negative bias that is in the media has to stop. Because if it doesn't, and as Denny will attest to, and you will attest to, and your listeners will attest to, property values continue to decline.
Yep. And you, Chuck, you know this from your
taxes
your world.
are going to continue to increase.
Let me find a piece that I have
And then
here.
ultimately what happens? Who wins by all this, Harry?
Nobody wins. And let me see if I can find this. Bond buyer and other people that, whether it's Moody's or any of the others, all this rhetoric that goes on, there are substantial prices to pay for it.
Absolutely.
The markets crush you when this kind of stuff is going on.
Look, Harry, perfect case in point. I mean, as I think I've said this before. When we are buying municipals for our clients, there are a number of ways to do our searches. You can search by, obviously, state. You can search by general obligation. You can search by revenue. You can search by maturity date. You can search by yield to maturity. And as you do your sorting and you do your yield to maturity, what's the bond that shows up on the top? What is the highest yielding bond that is available right now? I mean, assuming there is inventory, because one, you got to be able to have inventory to buy and sell, but City of Atlantic City general obligation. All right? So that makes it very, very expensive for the city to continue to operate, because if I'm going to lend you money at, say, because you're a good credit risk, and I'm going to lend you money at, let's say, I'll throw a number out there because I like you, I'm going to lend it to you at 4%.
Okay.
All right. It's not terrible. If I went to the City of Atlantic City, am I going to, or is an entity going to lend that money?
Well, that's why the plan from Senator Sweeney, the Senate President Sweeney, was for the county to do it.
And that's totally ridiculous.
Because they have such a wonderful
that's totally,
bonding capacity and record.
I'm going to leave it with that, Harry, but that being totally ridiculous. Okay?
All right, let's do this.
Right,
let's get our first break in, and when we come back, we will shift gears, and we will talk finances, and Chuck's got a whole agenda straight ahead, 19 minutes past the hour. You're listening to Chuck Malamut, and a reminder, not only is Chuck here every Tuesday in the 8 o'clock hour, but he's always available, the entire Malamut group, for you and yours, for all of your financial planning needs. Turn to Chuck. Tell him that I sent you. 609-383-2010. Thank you. With Chuck Malamut, our official financial advisor. Chuck, I know you have a lot of ground to cover. Time is yours.
So, Harry, we solved all the Atlantic City problems in 17 minutes. So
yeah. At least we talked about them, and they need to be solved.
We had Denny that gave us a head start, so that was very helpful. So, if your listeners learn anything from the last couple of weeks, Harry, and what we do all day long, and that's to be able to exhibit some patience and check your emotion and leave them at the door. Because what happened, if you think about it, the S&P, the NASDAQ, the Dow Jones, international markets last week, Harry, were up anywhere from, call it about 3 to 7.5%. Now, we are not totally out of the woods, because what has happened now, if you look at the markets going into today, we basically cut all the February losses and we're slightly positive. So now we're working our way back from all the sell-off that we had in January. So on average, the S&P is down a little bit less than 6%. Same thing holds true for the Dow Jones. The NASDAQ, the technology latent index, unfortunately is down to closer to 10. But what has been happening here is that we have continued to trade based on what is happening with oil. There's been like a 90% correlation of late with the market trading based on how oil trades. Historically, that's about a 50% correlation. So
Chuck, what happened with Iran and some of these other nations that all started to talk about OPEC, they were going to tighten the spigot? oil has come down, and the price of a gallon of gasoline has come down like 10 cents since they said that.
Well, yeah, not that insult to injury, Harry, but airfares are continuing to increase now.
Oh, they're increasing?
They're increasing now.
Well, how are they doing that? It used to be the fuel surcharge was the reason they were increasing. I'm glad I booked my 2 vacations this year already.
But what you're going to see, I mean, there were a number of airlines in the last week or so that are now putting price increases into their airfares.
Already got mine.
So having said that, look, we are at a sort of at a crossroads here, because the markets, continue to trade on a fair amount of volatility. The VIX, as we know it, that measures volatility, is down significantly over the last 2 weeks. Investors, I think, for the most part, are now a little more relaxed than they were, say, as we got to the end of January. Because if you looked at where we were as we got into the beginning of the year, the market really wasn't trading based on fundamentals, based on earnings, based on lower oil prices. The market, there was a disconnect. And, we've gotten through fourth quarter earnings. Most of the earnings were relatively good. I mean, if you take a look at, as of where we were yesterday, 90% of the S&P 500 companies have reported. And we have talked about this, before, so this shouldn't come as any surprise. 75% of the companies that have reported have beaten the analyst estimates, which have been reduced, that being on an earnings per share basis. And most of the results have come in about 4 to 5% above expectations.
Chuck, several of your listeners have asked me to ask you, and you just reminded me of this. When you talk about what's been happening lately, is I've been hearing you talk over a number of weeks now, companies have been meeting the bottom line but not meeting the top line. And what's the deal there? Is that because they've had operational efficiencies so they can ultimately make the bottom line, but they're not making the top line? What's the explanation?
Well, yeah, what is happening, and this has happened in previous quarters, that there's been revenue misses, that being on the top line. And that tells a whole different story, because when you look at and you get into earnings at this point in time, Harry, for the quarter, half of the reporting companies in the S&P 500 have missed the top line number. Now, earnings year over year are going to probably show a negative result year over year. And that's what we just came through in the fourth quarter of 2015. We seem to think that could really be the trough in earnings growth. And markets should hopefully find some comfort in the upcoming quarters should the earnings growth continue to tick up. Now, I don't like to talk about individual securities, and you know that. But what was very, very interesting yesterday, and it came across the tape, and it was all over the news, a potential merger of two very, very big aerospace companies that have a big footprint in aerospace, that being UTX Technologies and Honeywell. Now, this is going on multiple times. This is not the first time. So, as it turns out, this morning or last night, United Technologies basically said we're not particularly interested at this point in time. But one of the reasons for that potential deal was to continue to wring out and have more efficiencies in your expense side, because you can't push your earnings much further than they are right now. So when you get, that M&A type activity into companies like that, it's the merger in an effort to continue to work through your expense line.
I personally think that would have been good for both of them, but it's always tricky because one seems to be the one that is weaker, and sometimes they don't want to do it.
Well,
being acquired, when I worked for a large bank, as you know, Chuck, for 3 years, we were acquiring banks. That's awesome. But when you're the one being gobbled up, it's not so awesome.
Yeah, but Harry, the point, I'm not looking at the deal to look at the deal per se. I'm
more. But there's a reason it didn't go down.
What I was trying to communicate, you have some, there's a lot of reasons, and I won't get into it, but I found it very, very interesting that deal, could have happened, and this is being done because of where we are with respect to the economy. If you take a look as to what happened in the last week or so, we had some very, very good follow-through in the equity markets, and most of the bias was towards the upside. I think there was a fair amount of short covering as well, because you're still hearing from a lot of analysts that's saying, hey, this is a rally you need to sell into to raise cash. Because, when you are, quote, in the bear market, you're going to have violent moves like we had, and that kind of forces out weaker hands. Last week, Harry, when we weren't together, there was a lot of angst, particularly around European banks. And because, if you take a look at where we are, U.S. banks versus European, the European banks are steps behind us with respect to rules and regulations and capital requirements and the like. So there was sort of a virus that went through, and a lot of the financials, particularly the European banks, took it on the chin. Now, they have since had a pretty good recovery. You get to the point where you kind of feel that the market gets very, very tired, and the sellers sort of exhaust themselves, and they get rid of all their positions. The emotion gets wrung out, and then eventually the market, makes a directional move in the opposite way, and that's, I think, what happened, last week. Now, historically, you go back and say, okay, did we put the lows in January? At the end of January, beginning of February, we seem to think that a lot of the markets made their lows as we got to the end of last month. If you take a look at where we are, Harry, we haven't seen valuations this low since 2008, especially where Japan, at this point in time, valuations are trading right at book value. So we seem to think there's value not only domestically but also internationally. And then when you have those kinds of comparisons, that's pretty much what a panic looks like. And think about it. If we were at the levels we are now in 2008, what happened in 2008? Oof. Okay, it was not good for any investor. So, we kind of kiddingly say, you always need to sleep with one eye open. In the month of January, if you were getting any sleep, you were very, very fortunate. And now I think we're back to having a still very, very nervous market.
Time out. We're going to come right back. One more power segment for at least 10 minutes with Chuck Malamut, the official financial advisor to the Early in the Morning program. Make him yours. Simple to do. Call Chuck and his team, the Malamut Group, at their Morgan Stanley Northfield office, 609-383-2010, for all of your financial planning needs.
Hey, it's Sean Hannity here, and this is South Jersey's talk station, WPG Talk Radio 1450.
Hey, thanks very much. Welcome back. We are with Chuck Malamut, our official financial advisor to the Early in the Morning program. He is from Morgan Stanley. The Malamut Group can be reached in Northfield at 609-383-2010. And Chuck is with us every Tuesday morning in the 8 o'clock hour. Chuck.
So Harry, there's been a lot of discussion around your favorite topic. We have a lot of favorite topics, and that being the Fed, and what is the Fed going to do? Because if you think about,
they're going to do NOTHING.
Well,
nothing.
If you think about the policy that they wanted to put in place as they got to the end of last year, where they were basically saying we're going to look at 4 hikes in 2016, that pretty much I think is fallen by the wayside, especially with negative interest rates, now, not only being in Europe, but also now in Japan. That was certainly not good for the markets here domestically, and it's certainly not good for economic growth. Imagine your listeners putting your money in the bank. In the bank, you put $10,000 in the bank, and at the end of the year, you have no deposits, no withdrawals, and you got $9,950. I don't think that's going to go very well for the banks.
No.
There's a G20 meeting this weekend in Shanghai, and that's where a lot of this started, a lot of this angst. So no accord is expected. But hopefully,
you mentioned Shanghai. One of the items I brought for your show, Chuck, was to ask you about China buying up American companies fast. Is this a problem?
Well, no, there is. It could potentially be a problem. I mean, there's a small construction company that I've been following for years, and they're now in play.
They're at a record rate.
They were going to be acquired by a European company, and now you have a Chinese company that jumped in at the very end, looking to do an all-cash deal. And there's all kinds of issues, with that, particularly with our government. So, but. Let's think about this, Harry, for a second. Energy prices, as you know, are basically at all-time lows. You kind of kiddingly, we talked about airline prices. We talked about, gas prices. And you do see some follow-through at the pump, and oil is beginning to stabilize somewhat. But I think what's pretty interesting here, the broader economy as we know it, earnings for the most part, except if you're in that space, oil and gas, exploration, production, and the like, the drop in energy prices, have not really impacted the economy that much.
I know.
Once you're out of that space. So,
but that's a consumer confidence issue more than the fact that people would spend it if there was a higher level of confidence.
Well, interesting as you say that, because I'm not going to focus on today's news, but as we went to break, I looked, and Home Depot reported, and they beat expectations, and stock was up in pre-market. So that means the consumer is, I think, starting, and you and Bill talked about this last time, I think the consumer is starting to, be a little more confident. We can talk about, the labor market. You think about it last week, unemployment rates ended up dropping, Harry, by a better than expected 7,000 to 262,000. So that's a good move. Inflation, and the Fed is looking for inflation. They desperately want inflation. CPI was unchanged in January. Core CPI last month was up about 0.3%. So that's the largest increase we've seen, Harry, since 2006, which brings the increase to about 2.2% year over year. So
can you state intellectually, honestly, that the fundamentals of our economy are strong? I'm going to tell you why I'm posing that question, because I'm starting to do a lot of reading about multiple states around the country, as many as 10, where recession is already a reality.
Well,
how are we doing?
Nationally speaking, I mean, there's been a lot of discussion around, what has happened of late, and are we headed towards a recession? And that discussion was not being held 6 months ago.
Because I don't want to say it, but it sure feels like it.
There are certain parts of the country, as you identified, yes, that are recession bound. We don't seem to think that is the case.
Good.
We do think, Harry, however, that the numbers that are being forecasted, are a little stronger than where we think we're going to be. We don't think we're going to be at 2.5. That's the number they're looking to achieve. We seem to think we're going to be more like about 1.5. So,
isn't this the strangest growth ever recorded in American history?
Well,
if we're being real,
I mean, there is.
1.5.
I think there is no growth.
Okay.
So I mean, but there are pockets of the economy that are doing better than others, and it looks like the consumer, is starting to spend a little bit. There is some confidence. We won't talk about the unemployment number. We'll save that for another day.
Honestly, if that is the case, and I believe you, that if people are becoming more confident and they will spend a little more freely. Remember, after the terrorist enemy hit us, and this probably is extraordinary by today's thinking, but remember, the American people were sent money to spend. Remember that?
I do.
Because the idea was spend. not recklessly, but spend, make a purchase, buy something in America. Don't let the terrorist enemy win. Spend that money. I remember everybody got about enough to buy like maybe one appliance or something like that, a major appliance, not like a small microwave, but like you could maybe get a washer or a dryer or, a refrigerator, freezer or something, dishwasher. And we did that. And what I want to see is get back to the point where gasoline prices being what they are right now, even in my little podunk corner of the world where it's always higher than it is in other places, it's $1.47 a gallon right now for a gallon of regular unleaded gasoline. Kirk Conover's store was $1.39. That should be infusing. We were paying, what, at one point, Chuck, almost $5 a gallon?
Yeah, and Harry, I think you're starting to see a little bit of that creep back into
That's hundreds of billions of dollars.
So we think that we're going to get some modest growth and modest earnings growth as we get into 2016. The many years of zero interest rate policy, hasn't produced better growth, hasn't produced the growth that we kind of expected.
But I believe if we didn't do that, it would have been worse.
And that was probably due to the fiscal policies that were, contracting and consumer spending remained low. So it appears that those trends look to be ending, and we think that government and consumer spending should promote additional growth. So the question, some analysts are saying 2.5, some are saying 1.5, and I think the big elephant in the room. I guess you're gonna appreciate this, is the fact that, because it's right up your alley, that with this presidential race that is every day, you can't get out. You can't get out of the way of the news.
Nope.
But because it is somewhat unsettling, it could spell some issues for the financial markets. Now, we're not going to talk about the candidates.
Do you think we get to a point where actually the election becomes so inexorably linked you can't separate it from the financial equations, because who the next president is, who the next Congress is? I mean, this is a huge pivotal election.
So I think the way you have to look at it, Harry, if you end up with a non-traditional, non-establishment candidate, and there are two.
One's actually going to make it.
If one of them gets elected, there's reason to believe that we might not be able to operate as we expect to operate, and it'd be difficult. Think about, you put somebody in there.
They didn't teach you how to silence that phone?
No, I'm trying to. I'm sorry. I do have to make a call when we finish.
I understand. You're on overtime right now.
I can't Harry, I'm typical male can't multitask. So. But Denny can. I can't.
I can too.
But you definitely can. But so if we look at the equity markets, it could be some. I mean, like I know that you're a big Donald Trump fan.
Yes.
Okay. And obviously a lot of people are. And if you have a non-establishment type person running, this country, it could create some additional market volatility and downside pressure on equities. And that doesn't mean that person is not a good leader. I think the market's saying, okay, that entity is not particularly experienced. And I think that's basically in politics.
Well, I mean, look what we've had for 7 years.
Right. Well, I won't. Yeah, I mean, obviously, anything could,
And the markets were very mature and found a way to work around all that. I think if you get a non-traditional candidate, and this isn't politics, it's reality, you might see something. It could be the exact opposite of what people would assume. It could wind up being very, very good for markets, because it could be somebody that would be looking at a very pro-job agenda, very pro-low tax agenda. This could be Harry, fantastic.
I can't agree with you more. I just think that remember, the markets have a tendency to be somewhat perverse at times, and the glass being half empty versus half full, and you just think about what the market is thinking about at this point in time.
Here's what I know as we feather out of your show and back into, Hot Talk, is that if the markets can survive the freak show for the last 7 to 8 years, they have shown me – I have so much respect for our financial markets because there has never been anything like this in history. And look at what this, what these financial sectors have been able to somehow achieve. I think it's actually more impressive than the actual numbers on paper will ever look like.
Yeah, Harry, and I think, looking into the next 6 to 12 months, I think what an investor needs to think about is, maybe do some dollar cost averaging at the appropriate times. And we think that equities will have, all said and done, believe it or not, we think we'll have a decent year. But we do expect a fair amount of volatility as we get through the year, particularly as we ramp up, towards November.
Stellar program as always, Chuck. Thank you.
Thanks, Harry.
Chuck Malamut, for all of your financial planning needs, turn to Chuck and his team, the Malamut Group at Morgan Stanley's Northfield office. 609-383-2010 is the phone number to reach Chuck and his group. 609-383-2010. The program that you just listened to was presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on the program are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. We'll have about 6-7 minutes uninterrupted, wide open forum when we come back in just a couple of minutes. If you want to jump in, 609-407-1450 phone lines are open. Dr. Bob Zlotnick is coming up in our fourth quarter. Very interesting guest, Dr. Stephen Levine of Princeton Psychiatric. He'll be discussing a new unorthodox pharmacological treatment for depression and anxiety. And then at 9:45, your United States Congressman, Frank Lobiondo. He'll be discussing federal initiatives to address alcohol and drug use. That's with Dr. Bob Zlotnick coming up in the 9 o'clock hour.